Hey everyone, welcome back to another dividend investing update. It's time to update you on the progress of our new Dividend Growth Income Portfolio for the month of December 2022. I started this portfolio with Fidelity about 3.5 months ago. I've been making small weekly purchases, and I'm pleased to report we're finally starting to see some dividend income being generated. I'll go over what we bought, the dividends received, performance of the portfolio, and the plan for 2023. I am Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor, just a guy who wants to share my love of dividend growth investing and building financial independence with passive income. Ever since starting the portfolio in mid-September of 2022, I've made weekly contributions and have made purchases every single Wednesday. Whether the markets are up or down doesn't matter. We have our plan of dollar cost averaging into this selection of ETFs and dividend growth stocks, and we just do this every Wednesday. The key is to be consistent. So I'm building out a Google Sheets document for this portfolio, and I've got some more changes to make now that we're in a new year. The first tab I'm going to show you is my contributions tab. For the month of December, we added $750 in cash to this portfolio. We're closing out the year with $2,950 in total contributions to the portfolio, and that's just under $3,000. So the goal for 2023 is to get another $10,000 into this portfolio. The plan is to do $200 per week going forward, if at all possible. If I see some opportunities to add a little more, I may, but $200 a week is the plan right now, and I'm happy with that. That would add $10,400 total throughout the entire year. And then in 2024, I would intend to accelerate the contributions even further, maybe trying to add another $15,000 in deposits for 2024 in this portfolio. And when you see my update video in January, I'll have updated this I'll have adjustments made for 2023 and 2024 with a place to add in some goals. So let's look at the dashboard page. The 2950 invested has a gain of 3.54% for both the year and for the life of the portfolio. Since it's still a new portfolio, it's up over $100. It's pretty nice. The portfolio is yielding 3.14%, and its yield on cost or yield on deposit is 3.26%. Even though this is a new account, it did bring in a small amount of dividend income. It collected $12.81, most of which was paid in the month of December. All of that money has been reinvested, which is why the cost basis is $2,963, because that extra $12.81 in dividends were reinvested. And that also includes about 20 cents of interest. With the rising rates, you might notice you're getting higher interest payments in some of your accounts. I really don't keep much cash in this one, but I do get a few pennies of interest every month anyway. And as for forward income, we're now at $96.46 annually. This is what we could expect to collect in dividends throughout 2023 if we weren't adding any further money into the portfolio and we weren't reinvesting dividends. And also if the companies weren't raising dividends. This is an average of $8.04 per month in dividend income. So that's not very impressive, but it's growing. This is a slow roll, but it's building up, and we're just going to keep with it in these early days. Growth is slow, dividend income is small, and it's hard to see the benefit of this right here. And that's kind of what I think prevents people from sticking with it, because if you do stick with it, this ends up being a lot of money coming in. I have the goals here listed out. The first one is that $100 of forward dividend income, and I was hoping to hit this before the end of 2022, but it looks like we're going to be passing this goal here in January of 2023. I certainly could have passed it in 2022, but I'm not chasing yield and I'm sticking to my plan. As for the rest of these goals, the next one, that dollar per day, that's actually $365 in dividend income. And this is sort of the goal for 2023. I want to see us hit that. And that should be pretty straightforward, easy to do with the consistent contributions if we're sticking to the plan. We're already 26% of the way there. So let's go over the purchases that were made in December. The first purchases of the month on Wednesday, December 7th, I added to my ETFs $40 to SCHD, $40 to VYM, and $20 to VOO. And that made $100 for my total investment that day. Now, SCHD in particular, I am extremely bullish on, and I'm going to get more exposure here. In fact, I have a Roth IRA investing series that I'm working on, and part of my strategy in that account for 2023 also involves buying SCHD. Needless to say, SCHD is going to play a huge role in my own 2023. So on the second Wednesday, I took $200 and I added $20 each into this group of stocks. Medtronic, Agri Realty, Amgen, Automatic Data Processing, Chevron, Kroger, Lockheed Martin, Snap-on, United Health, and Waste Management. On the third Wednesday, December 21st, I took $200 and added $20 each into this group of stocks. Aflac, Best Buy, BlackRock, Broadcom, Cisco, Comcast, Home Depot, Mondelez, NextEra Energy, Procter & Gamble. Additionally, that day I took an extra $50 and I put it into VOO, beefing up our exposure to the S&P 500 index. This is always an excellent choice to put extra funds. Anytime I have a little bit of extra money, that is just a no-brainer to me. Put it in the market, the broad market. It's going to give you market matching returns. I want this to be a big part of our portfolio. So my total investment for that day was $250. And then on the final Wednesday of the year, December 28th, I put $20 each into my high yield stocks. That's Main Street Capital, AT&T, Walgreens Boots, and Kinder Morgan. I also put $20 into VOO. And then I also put $50 each into SCHD and VYM, beefing up our ETFs. And that made $750 in investments for December, not counting dividend reinvestment. Speaking of which, let's take a look at dividends received for the month of December. A lot of dividends, still in small amounts, but they are growing, and they are only going to grow more. This is a record month for us, although this is still a very young portfolio of only 3 months old. We started off the month with dividends. On the 1st, we received 33 cents from Aflac and 29 cents from Kroger. On the 8th, we received 39 cents from Amgen. On the 9th, we received 51 cents from Snap-on. On the 12th, we received 59 cents from Chevron and $1.99 from SCHD. On the 13th, we received 22 cents from United Health. On the 14th, we received 25 cents from Agri Realty, one of our 2 monthly payers. On the 15th, we received 47 cents from the Home Depot and 38 cents from NextEra Energy. On the 16th, we received 28 cents from Waste Management. On the 20th, we received 40 cents from Main Street Capital. On the 22nd, we received $2.27 from VYM, the Vanguard High Dividend Yield ETF, the one we're kind of pairing up with SCHD in here. On the 23rd, we received 56 cents from BlackRock and 67 cents from VOO, the Vanguard S&P 500 Index. On the 30th, we received 69 cents from Broadcom and 47 cents from Lockheed Martin. Also, there is another 18-cent special dividend from Main Street Capital that Fidelity is still processing. Main Street is the only one out of this group that seems to take Fidelity a couple days to handle. Otherwise, Fidelity actually gives you your dividends a little early, like the night before. They'll have already made the transaction to reinvest them, and it's not something you see. Like with Schwab, they usually come in like midday, and with Robinhood, they come in usually after the end of the day. So Fidelity, I think, for dividend investors, just a side note, has been really happy with them. Also, we received 17 cents in interest off cash that was in the account over the course of the month. Sometimes I'll send money in, over the weekend that was meant to be invested on Wednesday, and so for those few days, it will generate a little bit of interest. So altogether, for December, we collected $10.94 in dividends, not counting the 17 cents in interest. And here's how it looks on my spreadsheet where I entered all of my dividend income. And here's how the forward income looks for the next year. I do expect that we're going to collect about $5 here in January and probably $5 or $6 for February. And by the time March rolls around, I think this $14 is going to be closer to $20. And with my next purchases, I do expect that it will push us over this $100 in annual forward income, which is going to be a nice milestone to hit. The first real milestone of this portfolio. Here is a performance tab I'm working on. We ended December with a balance of $2,407.12. And after adding the $750 for December, we're now at $3,067.83. Over the month of December, we are down a little less than 3%, but notice we had very good months there in October and November, and that the overall portfolio is 3.5% in the green. Here is the portfolio in sortable format. I have it sorted by weight, and the clear 3 largest positions, as usual, are my 3 ETFs, SCHD, VYM, and VOO, which all together are making up about 27% of the fund. I want this number to be between 25 and 30% right now, so we're in a really good place. Then we have my 20 dividend growth stocks and 4 high yield stocks, and we have about $90 plus some dividends invested into each of those so far. Let's see who my winners have been. We'll sort this by gain. Their top 3 performers have been Best Buy, Broadcom, and BlackRock. We're up over 15% on Best Buy. This stock combines a high yield with high dividend growth, and you don't find many companies like this. I'm glad we're growing a small position of this in the fund and that it's doing pretty well. Also, stocks of notable performance in the fund are Aflac and Procter & Gamble, both up around 10%, as my 4th and 5th best performing positions. On the other side of that coin, let's look at who has been underperforming. Our worst performer so far has been Walgreens Boots, down 8%. Second, Medtronic is down 6%. A couple weeks ago, I released a valuation video on Medtronic highlighting why I think it's one of the best deals for dividend investors right now. And I still think that's the case for January. And then we have Waste Management, and that's down close to 4%. And the rest of these red stocks are 2% or less, which I really consider about flat. And I wouldn't mind seeing some of these drop more as we go into 2023, as these are still positions I'm building up. And I see myself continuing to do more of the same here in 2023. Heaviest focus will be on the ETFs and slowly building up the rest of these. I expect by the end of 2023 that maybe we have about $500 wrapped up in all of these companies, in each one. At least that's more or less the goal. So 2023 isn't going to be the most interesting or exciting year for this portfolio, more one of just building up our foundation. I don't see myself adding any new stocks to it in this year, although that could change. I feel like it already has plenty of companies in it, though. Maybe I went a little heavy and could have focused on fewer stocks, but I want lots of dividend payments. The way I see it, the more dividend payments we have spread around, the safer the overall passive income for this portfolio is. So if I have 20 companies and one cuts its dividend, I've potentially lost, about 5% of my income source. Where if I only have 10 stocks in there and one cuts its dividend, well, then I'm down from 10% of my income. That's kind of the logic I've used. So I might be over diversifying a little bit, I'll admit. That's one thing I can say about this, but I love the companies I've selected here, and I'm glad to be building up these positions. Last thing I'm going to show you guys is the diversification page here I'm building up. You can see the diversification by sector. My highest position there is in the index funds and ETFs, like we mentioned. Heavy on consumer staples. That's probably our second there. Yeah. And there's the diversification by stock. Here is the estimated income by sector. This is sort of the where is the income coming from pie based on sector, and here it is based on stock. You see my biggest payers are VYM and SCHD. And with that, folks, I have lots of work to do. My next video coming up is going to highlight my top 4 picks for the month of February, companies that I see as undervalued. And that video will be coming out in the next couple days, aiming for maybe Thursday. I think I'm going to do try to make, for 2023, we're going to have our release schedule. I have a video on Thursday and a video on Sunday. I'm going to do my best. I do work full time and I'm a single father. So bear with me here as I build up the channel. I'm really so thankful for all of you who have subscribed so far. If you're still with us and if you haven't subscribed yet, please consider subscribing. It really helps me out with the algorithm. If you aren't following me on Twitter, please check me out at Div Growth Income and let's connect. And until next time, folks, keep investing.